Mi Jun, who protects the rights of American stock investors, is from the American Stock Investor University. Let's begin with the United States stock market news for May 6th. I, Mi Jun, a consistent follower of the basics of United States stock investing, am here to greet you again today. Mi Jun's panelists, I'm not sure if you had a good weekend, but today I have some personal news to share, so let me share it with you, Mi Jun's panelists. I was briefly mentioned on a broadcast a few days ago. My family and I are planning to move to Kuala Lumpur, Malaysia this summer. By the way, I was contacted by someone in Kuala Lumpur, and I heard the good news that my kids, both my daughter and son, have passed their entrance exams. So now, our move to Southeast Asia is certain, and I think I can finally say it like this. It seems that I don't have any ties to American or Chinese broadcasting either. Right now, I'm living in Cambridge, England. So when I have to go to the United States for business, I go to the airport. So if you look at it that way, the broadcast time is when people are reviewing the content from the day before. There are a lot of people who say things like this. In my case, I wake up early in the morning in United Kingdom time, create content, edit it, and upload it. But still, it feels like there are days when I fall behind. But if I move to Malaysia, when I wake up in the morning, it will be evening in the United States. So as soon as I wake up, I can organize various news and immediately make a broadcast to share it, which means I can deliver United States stock market news to many people faster than I do now. So I hope this will be helpful news for many of you, and that's why I mentioned it. Now let's start right away with today's United States stock market news for May 6th. Today as well, I'll summarize the current situation of the United States stock market for you. Let's take a look at the S&P 500 chart. First of all, there was a noticeable rebound. However, there were also some declines, and the number of red and green stocks was almost the same, so it wasn't a very good trend overall. In addition, among the mega tech companies that lead the market, there were more stocks that fell. Stocks like Apple, Amazon, and Tesla, which are considered to be at the center of attention, fell sharply. That's what happened. Also, recently, Bugsy's stock price dropped more than 5%, and many investors sold Bugsy shares due to concerns about Warren Buffett's possible exit from the company. That's how you can see it. Therefore, yesterday, the index was unable to recover and continued to fall for 9 consecutive days, marking a record. It would have been nice if it went up for 10 straight days, but lately it's been going through some technical adjustments. I mentioned this on the broadcast yesterday. Every investor has a different investment period. So, when the S&P 500 surged nearly 10% in 9 days like this, it's natural for some degree of correction to follow. That's how you should look at it. All 3 major indexes fell yesterday. Microsoft, small cap, and growth stocks dropped a lot. The Nasdaq 100 also fell 0.59%. Most of the 11 sectors that comprise the S&P 500 were down. Energy was also the worst performer yesterday. Recently, oil prices have dropped significantly, and in the morning, there was news that oil production would be increased. As this news spread, oil prices continued to fall even further. Second, consumer discretionary. Consumer stocks have dropped over 1%, particularly those heavily influenced by interest rates. This sector has been hit hard, as is evident. If you look at it in detail, industrials and communication services recorded pluses. In particular, recently, communication services have been strong, thanks to the outstanding earnings announcements from Meta and Google. That's how you can see it. Before all 3 teams actually opened their branches, I saw the miners from the free agent department. And then, since there was some positive news in the morning, there were expectations that a rebound might be possible, but it didn't happen. That's how you can see it. Yesterday, there was one positive piece of news related to the market economy, and I checked this part as well. The Institute for Supply Management Services Purchasing Managers Index for April was announced. It increased by 0.8 points from the prior month, indicating the United States economy remains strong. In April, the Institute for Supply Management Services Composite Index rose by 0.8 points from the previous month to 51.6, indicating an expansion in the economy. What does 51.6 mean? The Purchasing Managers Index announced monthly by Institute for Supply Management is a leading indicator. This index is based on a survey of purchasing managers in each industry. Compared to last month, they ask straightforward questions like, are more companies hiring now? Is business performance improving? Is the situation getting better or worse? If the answer is above 50, it means the situation this month is better than last month. That's how they respond. Even in the service industry, this month is better than last month, allowing us to draw conclusions. And also, according to the Korea Consumer Agency, the price index for fried chicken recorded 65.2. So it's reached its highest level in 2 years. So, to sum up, the economy is still alive. And although there have been some economic indicators released recently, the main issue was the price index. There was concern about inflation, so while the economy is solid, the fact that inflation is strengthening made investors nervous. That's how you should see it. I tried to simplify the article's language to make it easier for you to understand. The Service Industry Purchasing Managers Index reached 51.6, surpassing the 50.4 market forecast, signaling robust economic growth. This may cause a short-term rise in demand for positive market factors. But that's the problem. The Consumer Price Index reached 65.1, its highest level in 2 years. If inflation pressure builds up, it can be a burden on the stock market. That's what you see here. And another factor is the rise in commodity prices. The market anticipates that the Bank of Korea will cut interest rates despite its tightening monetary policy. Therefore, it can have a positive effect. The volatility of the financial market may expand. There is also uncertainty about whether companies will be able to handle the increased costs due to higher interest rates, depending on the industry. In the short term, it is possible to conclude that housing prices may show a temporary stabilization. Next is the recently announced Service Industry Purchasing Managers Index. Although it is a favorable factor for economic expansion, the burden of price support is increasing, so concerns about inflation are growing. Personally, I think it is reasonable to interpret the situation as somewhat mixed in the short term. In summary, the rapid price increases, while indicative of economic growth, are also fueling inflation concerns. This explains the mixed reaction in the United States stock market yesterday. I will continue to briefly review the market indicators and move on. Looking at the market chart, it's 53 and 87. Earlier it was 56, so it has dropped a little. Still, it's not bad. And the number of items in the upper trend line is higher than the number of items in the lower trend line, so this part is positive. The market supply and demand index BING3 remained unstable until recently, staying unchanged as of June 24th. If the number of items falls below the 200-day moving average, that's when we can say the market is fundamentally in an upward trend. So this is something we can watch with some confidence. Next is the Fear and Greed Index. It has gone down, and now it's barely above the fear level. You can see here that the sentiment of the market is quickly shifting to an upward trend. Looking at the max score history provided by Choice Stock, you can once again confirm that the market's sense of unease has eased to some extent. Next is the performance of the Maidon Top Picks. The Maidon Top Picks have been updated from 18 items to 20 items. 2 stocks have been added and they are at the top of the list. The first is Trade Desk and the second is AMD, which has newly entered the Maidon Top Picks this time. That's how it looks. Yesterday, 7 stocks rose. Trade Desk performed best, increasing 2.61%. AMD also rose notably by 1.81%. 1.36%, CrowdStrike Holdings 0.89%, Vista 0.52%, Meta 0.38%, and 0.12%. All the other stocks went down. Palantir dropped by 0.41% and Bitcoin fell by 0.56%, closing at 94,330. 0.59%, 1.43%. Taiwan Semiconductor Manufacturing Company by 1.61%, 1.62%. Celestica by 1.82%. Amazon by 1.91%, 1.99%. Tesla by 2.42%. Nextera by 2.56%. And Innovator by 2.98%. Lastly, B2 dropped by 5.58%, showing their worst performance among them. On today's broadcast, I will briefly introduce the 2 items that were newly added to the United States original top picks so that you can easily understand them. The first item was added to my watch list on May 4th. It's a public offering stock that hasn't received much attention yet. I will explain it with this title. Many of you may have already guessed, but it's AMD. Today is May 6th, and it's AMD. We are just ahead of the earnings announcement today. So in this video, I will carefully analyze AMD's stock price and give my predictions for the earnings as usual. In this broadcast, I'll highlight the key points of the content for easy comprehension. AMD is Data Center Artificial Intelligence Acceleration, what we call a graphics processing unit. The Instinct MI300 series is being adopted in major big tech industries such as Microsoft, Meta, and Open Artificial Intelligence, and is being used for artificial intelligence and other applications. The expansion of the artificial intelligence infrastructure market is accelerating. Until recently, NVIDIA had a monopoly, but lately, AMD has been gaining a presence. You can interpret this as very positive news. The second point is especially important. Google, Microsoft, Meta, and Amazon are the main players. According to the report, the four major tech companies plan to invest over 30 trillion won in artificial intelligence infrastructure by 2025. Therefore, the demand for GPUs will continue to soar. In that market, there was a lot of concern at first, but it turned out to be unfounded. Going forward, these industries will continue not to spare investments in artificial intelligence. Junryo's guidance has been adjusted. Let me show you the consensus for the earnings that will be announced today as the third item. First quarter 2025 sales are projected to be around $71 billion. If that happens, the annual growth rate will be 30%, and the earnings per share is 0.93, which means the annual growth rate is expected to reach 50%. And one more positive aspect is that the previous 3 quarters have shown steady and solid numbers. Originally, expectations were higher, but as they were adjusted downward, the likelihood of exceeding them has increased significantly. That's one way to look at it. Currently, there are 34 analysts covering this stock. With an average target price of $145, there is approximately 45% upside potential compared to the current price, indicating significant room for growth. And one more important part is that the current forward price earnings ratio is about 22 times. If you look at the growth rate, sales are expected to grow by 30% and earnings per share is expected to grow by 50%. But the fact that the current price earnings ratio is 22 times means that the price earnings to growth ratio is extremely low. Compared to the growth rate, then there are a lot of stocks with high valuations. If you look at it this way, you can see that the reason why so many stocks have high valuations is because of this. It's NVIDIA. Compared to NVIDIA, the market share of artificial intelligence GPUs is still very small. NVIDIA holds about 80 to 90% of the graphics processing unit market, especially in artificial intelligence. That's the situation. However, AMD has an advantage in memory capacity and price competitiveness. The price of AMD's supply is currently lower than NVIDIA's, but when it comes to supply volume, AMD can't match NVIDIA. In the industry, falling behind in artificial intelligence means you can't survive. That's why AMD chips are in high demand and hard to get. Expect this situation to continue. There is a supply risk. Export control issues exist between NVIDIA, AMD, and China. In 2025, the export ban of the MI300 to China will result in a maximum sales loss of around $800 million. Young Jin has announced Taiwan Semiconductor Manufacturing Company's current supply bottleneck situation. What are the implications? Taiwan Semiconductor Manufacturing Company manufactures AMD's chips along with NVIDIA and MediaTek. So if Taiwan Semiconductor Manufacturing Company can't supply enough chips, there's no way to avoid a shortage. This is also a risk that we need to pay attention to. However, in the case of AMD, because the stock price has already dropped a lot and is at a relatively low level, even if unexpected self-reliance occurs today, I personally expect that the stock price has the potential to rise by more than 10%. However, if the earnings results are not that good, the stock price could drop by as much as 10%. We must recognize the stock price could rise significantly due to many positive factors, or fall. The key point is that many expectations are already priced in, and the stock hasn't fully responded to them. Keep this in mind when making predictions. I will try to explain things in more detail and deliver the content as clearly as possible. First, if you look at the momentum of the stock, recently, as the stock price has rebounded, the momentum has strengthened a lot. Out of the 26 indicators, only 6 are showing a buy signal, 9 are neutral, and 11 are showing a sell signal. Therefore, momentum is recovering rapidly with a lot of strength. The relative strength index has also surpassed 50. The stock price is currently nearing $100. If you look here, the 50-day moving average is 99.78 and the 98.59 is 98.59. If it can stay above $100 for a while, eventually it will break through the 50-day moving average, right? A short-term correction is in the process of recovery, so it can be interpreted positively like this. AMD's one-year stock price chart shows a strong downward trend, especially in recent times. Looking directly at the upward trend, you can see the pattern of breaking through previous highs is turning into a short-term upward trend again. This is how we can have expectations. Next is the evaluation of choice stock. Choice stock is gaining significant attention. This means that they have already made a purchase. On March 31st, they bought this stock. They are still watching for now. However, the SMART score is 78. The company is a fast-growing blue-chip stock, ranking in the top 3% of the stock market. So, Fieldmount is growing steadily. If you look at it this way, the valuation is low. Recently, when the price was around $, 145 choice stocks saw an upward trend of about 45%, maintaining its strength. Moreover, as previously stated, the momentum is growing. Li Dongpyeongsun is also noteworthy. On April 28th, the 5-day moving average crossed above the 20-day moving average, which triggered a golden cross. If you keep going up, even the 60-day moving average hasn't been reached yet, so you can carefully expect a further upward trend like this. Next, I will briefly introduce the two new types of desk trays that have been added to the original lineup. The Trade Desk, a new Mijiwon top pick, is a stock that has been actively held in my portfolio for over 3 years and is very familiar to me. However, since there may be viewers who are not very familiar with the Trade Desk, I will focus on explaining only the most important points so that everyone can understand. First of all, what is the Trade Desk? It's a platform that connects advertisers with various media companies. It's a global advertising tech company that supports advertisers in purchasing digital ad inventory across various channels through a programmatic method. The company assists advertisers in using technology for buying and selling ads, allowing them to receive data and optimize ad performance. There are several business characteristics which I will explain in more detail one by one. The most crucial market is the connected television sector. What we call CTV in Korea is referred to as smart television. The reason why smart television is so important is because traditionally, regular television S only showed ads like commercials. However, as connected television S have become more popular, now ads can be displayed differently depending on who is watching. For example, when we watch YouTube, the ads that different people see on YouTube are different from the ads that I see on YouTube. Connected television can deliver such results, driving many companies to focus on online advertising. This is how it works. Now first there's the word Bengala operating system, and then there's another difficult term called Shinseirara. If these two things are combined, the cost per mille premium and fill rate will improve. That's what I'm saying. I have no idea what that means either. In simple terms, cost per mille premium refers to the advertising unit price, while fill rate indicates the proportion of ads served compared to the total number of ad requests. If both of these go up, in the end, you'll be running a lot of ads and the revenue you get from there will also increase. So by continuing like this, the ad unit price goes up and you can run more ads, and that's the reason for both. There's something called the Binara operating system Shinsera. If you look at it this way, first of all, Binara operating system is simply put an operating system. The Trade Desk has created a software platform called Connected Television for the television environment. In the process, when placing ads on connected television, you need to build various devices and systems together. With the Venturia operating system platform, you can now manage ad delivery, performance measurement, and automatic optimization all in one place. Therefore, advertisers can now deliver ads more accurately to their desired targets and execute advertising in a more effective way. That's how it works. If you look at it from a different perspective, it's even more amazing. ThreadDesk is a technology that provides data signals to accurately measure recent advertising performance. By listening to examples, it collects and analyzes information such as viewers' interests, purchase intentions, and device usage patterns in real time. So the data that comes out of here is connected to platforms like Ventura operating system that I explained earlier. This way you can accurately predict things like which ads viewers are most likely to respond to and which ones have the highest conversion rates. That's the kind of capability that is created, as you can see here. Next, there's something called OpenPass. OpenPass is simply put for advertisers and publishers. Publishers are the ones who actually run the media. There are many different media outlets that run our ads, and the place that transparently connects these two sides in real time is called an open marketplace. Traditionally, when an ad request comes in, there are ad buying systems, ad selling systems, and various intermediary platforms in between. The price was determined through this server, that's how it worked. The process was too complex, making it hard for advertisers to know their real-time ad spending. But now, if you use OpenPass, you can see all the bidding processes and price information at a glance. In the programmatic advertising market, ads are bought and sold transparently through automated systems. I want to get the most out of this space I have, and now I can clearly set the price, and advertisers can see exactly how much they're paying. This means that ad placement can be done transparently and openly. So now prices are determined transparently according to supply and demand. A system has been created to boost trust between advertisers and publishers. Here's how it functions. Next, there's a platform called COCONARA, which is a self-developed advertising data management, analysis, and campaign optimization tool for Trade Desk. So what are the characteristics of this platform? When we say customer, we're referring to the first-party data owned by the advertiser, not the advertiser themselves who pays for the ads. We have a lot of products and services being sold, but how are they connected? How are the regions organized? And how do these revenues come in? There are various types of customer data. If you put this data into the cookie platform and run it, that's how it works. By effectively using data, you can maximize ad performance and access tools to optimize campaign results. So, on the customer's side, you can see that a very small platform is already installed on the trading desk like this. Finally, I'll explain one last thing. This time, it's about UID2 United Identification 2.0, so you can think of it as a unified identification. This means that when many people use the internet, there are cookies. Cookies are what allow us to search somewhere, use a certain platform, and save that information. But you can block cookies. And internet users really don't like their personal information being exposed like this. UID2 uses anonymized email hashes or mobile advertising IDs instead of traditional cookies to protect individuals' personal information. It's an identification that can still distinguish users. That's how it works. And once you've logged in, are users identified by their membership information? Even if you use a different website or app, the same UID2 is applied. So, the advertising platform can identify that this person is interested in A and can show them related ads, allowing for personalized targeting like this. Even if you don't use cookies, user information can still be tracked in this way. Next, I think I should explain about memory. Previously, we saw that AMD and Mac-based trade desk memory prices have dropped significantly recently. So, you can see that memory is a very cyclical commodity. As of May 2nd, 2025, the stock price is around $54. Recently, the stock price has dropped a lot. Even so, if you look at the consensus for sales growth in 2025, about 18% growth is expected. This is also quite delayed, that's the point. And for operating profit margin, the consensus is expecting about 39%. This is about 2 percentage points lower compared to last year. Originally, the margin was 41%, but now they're expecting around 39%. That's the situation. Fedment is still considered a solid stock with growth potential. However, the revised earnings per share estimates for fiscal year 2027 are around $2.75. So we can calculate the forward PE ratio. The stock price is volatile, currently at $54. The earnings per share estimate is $2.75, dividing 54 by 2.75. The current multiple is less than 20 times, indicating it remains relatively low. So, what about the trade desk? In the past, there were times when it traded at a minimum multiple of 60 on average. That's how it has been. So, if the market returns to a more favorable upward trend, a multiple of around 30 can be easily achieved. Personally, that's my judgment, especially for Trade Desk, which is a software company we know well, the SaaS industry. SaaS companies typically maintain a price-earnings ratio of over 30 times. Therefore, if the market sentiment improves in the future, it's likely that Trade Desk's price-earnings ratio will go above 30 times. Expecting this is quite reasonable, and that's my personal judgment. Applying a 30x multiple to the projected 2027 annual earnings per share of around $2.75 yields the valuation. The estimated stock price is $82.50. Even with a conservative 25 times multiple, instead of 30, it would be $68.75. So even if we just apply a 25 times multiple, that's still more than a 27% increase compared to the current stock price. If the target stock price is $82.50, indicating at least a 50% upside potential from the current price. Even with this conservative view, there's still potential for growth. That's why I can explain to many people that I recently added the stock called Trade Desk to my portfolio. Next, I'll move on to Palantir. Recently, Palantir's earnings results were announced, and as you know, the stock price has dropped after the earnings announcement, even though the earnings results were up by 87%. Now, is it right for Palantir's stock price to drop like this? I think it would be good for many of you to check the earnings results directly and judge for yourselves. First, let's take a look at the earnings results. First quarter 2025 sales were reported at $808.4 million. That represents a 39% increase compared to the same period last year. In the United States, sales increased by 55% compared to the same period last year, the highest growth in the United States market. Now, there are civilian and government sectors. The government sector is excluded, so we're only talking about sales in the civilian sector. Now, sales in the civilian sector in the United States increased by 71% compared to the same period last year. And not only that, overall, there was also a 19% growth compared to the previous period. Achieving nearly 20% growth in just 3 months is an amazing result. And over time, they managed to achieve a scale of over $1 trillion. Next is the number of customers. Compared to the same period last year, the number of customers increased by 39%. We have 769 customers, which is not enough to reach our goal of 1,000. Personally, I think this is still a huge gap. Even if we increase tenfold from here, it still wouldn't reach 8,000. Even now, Palantir's customer base can grow rapidly, making its growth potential limitless. That's my perspective. If you look at the top 20 customers, each of them is spending an average of $70 million annually, and compared to last year, that's a 26% increase. Therefore, the number of customers continues to increase, and the average spending per customer is also steadily rising. As seen here, an increasing number of companies will want to utilize this service. Next is the current profit margin. If you record $37 million in sales, the margin is a solid 42%. If you make 100 million won in sales, 42 million won of that becomes free cash flow. That's an incredible margin. And the total profit margin is about 82%, while the operating profit margin is 39%. If you record $1 million in sales, the margin is about 44%. An operating profit margin of 44% is an incredibly high figure, as you can see. This time, I will briefly review Kyung Young-jin's comments. First of all, Chief Executive Officer Alex Kaff said that in the United States commercial market, they saw 71% sales growth, and in the government sector, they saw 45% sales growth, which shows a strong momentum. That's how they achieved these results. He attributed the results to 2 main factors: aggressive investments and the introduction of artificial intelligence technology. That's how he presented it. And another evaluation is that it's still not enough right now. That's how they objectively assess the situation. Next is Chief Revenue Officer Ryan Taylor. The company reported a 39% sales growth compared to the same period last year, with United States sales accounting for 55%. The AIP artificial intelligence platform is experiencing explosive growth. United States commercial sales have increased for 10 consecutive quarters, contributing to the overall growth. Next is Chief Financial Officer Dave Glazer. The adjusted operating profit for the first quarter increased by 44%. This means that sales continue to grow and profitability is also improving. That's why things are going well. That's how he explained it. He also made a positive announcement that the total sales guidance has been raised to 3.896 trillion won this time. Now, if we look at the guidance a bit more closely, the 2025 annual sales guidance has been raised from at least $3.89 billion to a maximum of $3.92 billion. United States commercial sales are projected to surge by over 68%, surpassing $1.178 billion, according to the announced forecast. The operating income guidance was raised from $171 million to $230 million. If that happens, operating profit margins could rise by 44% on average in a year, according to their story. Next, Jang Yo-hyun-gyum provided an outlook guidance ranging from $1.6 billion to $1.8 billion. If that happens, we can expect the operating profit margin from sales over the next 2 years to increase significantly from 41% to as much as 46%. Next is the Q&A session. First, there's a question about the Welbushi Eye Bridge, which we know well. Considering the information part and budget environment, there will be more opportunities for higher expected profit margins, hence the question. It's Alex Kaufner. We expect to consistently deliver strong results. In the system inspection process, Palantir's matching solution will take the lead. Our system is so good in terms of quality that it doesn't get replaced. We need to win more government contracts, and this is what we expect. If you look here, you'll see some very important questions. The United States Department of Defense has recently announced that it will significantly cut its budget, and this announcement has drawn a lot of attention. Therefore, concerns are growing about whether such a drastic budget cut will negatively impact weapons exports. Now, regarding this, Kyung Young-jin commented as follows. Palantir and its divisions can handle the order reduction. What does this imply? The United States Department of Defense continues to monitor security threats through various measures. To respond to various attack methods emerging in new environments like cloud, artificial intelligence, and the Internet of Things, Palantir is actively introducing its security analysis solutions. This is how understanding becomes possible. However, right now, cybersecurity is becoming too important, and each country is already paying a lot of attention to cyber terror. Therefore, companies that can provide such solutions immediately are flourishing. Even if the United States Department of Defense budget is cut, we don't need to worry, as this understanding seems possible. Next, I'll show you the numbers compared to the previous period. To explain, the point is to examine the growth trend quarterly and monthly, not just compared to last year. If you look at the growth rate of sales, last quarter it was plus 36%, but this quarter it grew by 39%. If things go well, next quarter it could potentially exceed 40%, leading to a sense of anticipation. Secondly, United States sales reached 7.2 trillion won in 2024 alone, but have now totaled 10 trillion won cumulatively over the entire period. Next, let's look at the current cash flow margin. In the previous quarter, it was 63%, but this quarter, it dropped to 42%. If you listen to the explanation about this, it's because of the expansion of investment in technology, human resources, and product development. So right now, we are investing a lot of money in the United States, and even with that, the current cash flow margin of 42% is still an incredible margin. This shows that such management is possible. Finally, I'll present the operating profit margin, which might interest many of you. When assessing a SaaS business, a value over 40 indicates an excellent business. The rule of 40 is calculated by summing the sales growth rate and operating margin. So what's the problem? For Palantir, the number was 81 in Q4, increasing to 83 this quarter. A value above 40 is considered great. They recorded 82 previously. To explain, the growth rate of sales is 39%, and then the operating margin is 44%. So if you add 39 and 44, you get 83. So if growth continues to accelerate and profitability keeps improving, then by following Bill Porter, there is no better software company than this. I think that's how you can sum it up. Now let me summarize Myun's words in one sentence. Palantir Technologies had a strong performance in the first quarter, and their division sales exceeded NLSE's expectations. In the guidance, they raised their outlook for annual sales, operating profit, net profit, and cash flow. However, despite that, the stock is down more than 8% in after-hours trading. From what I see, the main reason for this reaction is that the stock price has surged nearly 60% in the past month, so the valuation has become expensive again. That's why people are judging it this way. To sum up, currently, the biggest risk for Palantir stock in the market is still its high valuation. Well, but there's one thing we should keep in mind. For growth stocks, valuation is often disregarded during the initial rapid growth phase. Growth stocks often have unsustainable valuations during rapid growth periods, which can persist as long as growth continues. However, when growth slows or reverses, the valuation collapses. Now, however, Palantir's growth trend is gradually slowing down. Therefore, up to now, as an artificial intelligence beneficiary, Palantir's investment value is valid. That's how I see it. So, when the stock price drops and the risk is reduced, that's when you should consider buying more. That's what I want to say. Today's last prepared article is about the market outlook. The United States stock market, which had been rising steadily during the recent rally, has now shown signs of a slowdown. This is from our investors' perspective in the current market. Was it just a temporary rally following the previous trend, or is this the beginning of a new bull market? It's a very crucial moment. Let's take a look at the outlook for the market through this article. At the end, I'll also share my own personal thoughts and perspectives so that many of you can relate. That's all for today's broadcast. This article has been delivered by an artificial intelligence voice that mimics my voice. I will continue to collect various articles so that I can greet you again tomorrow with news that can help many people invest. Let's keep hyping together until the day we all retire through investing in United States stocks. Have a happy day, thank you. Even in early April, I followed the stock market. The government's intervention in the treasury market actually led to a sharp drop. But within a month, the situation completely reversed. At the end of May, where will we be again? In early April, the market, suppressed by recession fears, rebounded after the announcement of a recession delay and promise of unrestricted reopening. After a turbulent April, the volatility continued into early May. However, on Monday, the S&P 500 index closed down 0.64%, ending its winning streak since September 1st. Then, the Dow Jones Industrial Average and the Nasdaq also fell, down 0.24% and 0.74% respectively. Go ahead and ask me a question. Is this a temporary rebound or the start of a genuine bull market? That's the question. First, let me give you a conclusion. The first quarter results, though not officially announced, have exceeded expectations. The point is that the 2025 earnings estimates for the S&P 500 index have not dropped significantly. Concerns about an economic slowdown and delayed interest rate cuts have not significantly dampened investor sentiment. The previous leader, Jody Bai, who led NVIDIA's artificial intelligence macro research, says that Jody Bai could be the start of a new bull market. He explains that while real industrial demand, such as for construction steel or new spreaders, is not showing signs of stress, the market psychology is still historically fragile, so investors are sticking to the basics and not updating their outlooks based on new information. He emphasizes that market participants are more influenced by relative sentiment than by actual data. Reference Bayesian principle, Bayesian Frenchian. When new information or events occur, it is a systematic way to update your existing beliefs with objective probabilities. On the other hand, the SA7 report indicates that the range is longer than expected. It is difficult to expect additional benefits outside of the already reflected tariff cuts without a tariff summit. The effect of tariffs is fundamentally reflected in the real economy and industry after the second phase, so the downward risk still remains. He said that, unlike what he thought, the recent event was less threatening than expected, and that fundamentally, the market prices are being evaluated lower than fundamentals. Tom Société Anonyme expects the S&P 500 to fluctuate between 5,100 and 5,500 and advises investors to pay attention to this range. From a technical analysis perspective, Jeff 500 graph of Enhei Sang-Soo Macro says that resistance is expected near the S&P 500 at 5,740. He says that while the recent spread expansion is positive, since there is no clear upward momentum yet, technical analysis is important here. Red Davis Research's Red Davis says that it remains to be seen whether this is a weak rally or a new strong rally, and that both scenarios are possible. Although it may be difficult to return to the sharp rally and psychological excitement we saw last year, the fact that the adjustment process was followed by a rebound is considered positive. Whether this is a decisive turning point depends on whether we are entering an economic downturn. In reality, Davis says that the United States is already in a recession, but he explains that official statistics have not yet confirmed this. If this is indeed a full-blown recession, there is a possibility that President Trump's social media company could be delisted from the market. Because neither the trade talks nor the World Summit have been finalized yet, nothing has been confirmed. If a new bull market is to actually begin, a tariff agreement must be reached, and the tax reform plan supported by the Republican Party must be finalized. Only then can the S&P 500's actual earnings outlook improve and growth accelerate, making a further rally possible. On the other hand, if tariff negotiations drag on and tax reform is delayed, the economy could fundamentally be at risk of a downturn. The market's direction will ultimately be determined by time. Just like predicting the weather or what will happen tomorrow in our lives, forecasting the future in the stock market is also meaningless. The future is not something that is fixed in advance, but rather it is created anew, depending on the many decisions and actions we make from now on. That's why wise investors do not try to predict the future of the market or industries, but instead respond flexibly to changing situations. On the other hand, people who live their lives wisely, like value investors, recognize that their future is not predetermined, and by working diligently without giving up, they gradually create a better future for themselves. We investors cannot accurately predict the future of the stock market, but our investment skills and insight can improve steadily through continuous effort. Instead of wasting time and energy trying to predict the future of the stock market, the reason we must work hard to improve ourselves as investors is right here. Thank you.